So chaos and confusion still continue at times, and we may be wondering if the Fed really knows what they're doing moving forward as we try to navigate current banking fiasco and stabilize the economy. As such, it's time for another market update and a peek at our local real estate market as compared to the larger national picture. Statistics are in for March, and we will go over those as well as the larger national view in this next issue of Cascade Living coming up next. My name is Scott Spiker, and I'm a local Southwest Washington real estate broker specializing in investors and related opportunities. Whether you're after a home with an ADU, have a 1031 exchange, or are looking for a multifamily house hack, we'll help you find it. Keep in mind, we extensively use video to view and tour property listings as well as promote any real estate you're considering selling. And to figure out your property's current value and get a free custom market analysis, please call, text, or email. So what is current data telling us about the local micro picture here in Vancouver and Southwest Washington? And how is that being influenced, if at all, by the bigger national market and U.S. economy? Let's start with most folks' main concern, which is affordability. According to a recent report from Black Knight Financial Services, home prices in these western least affordable cities have seen notable price drops, including negative 10.5% in San Jose, California, negative 10.3% in San Francisco, California, and negative 7.5% in Seattle. And yet, in 40 major cities east of Colorado, prices rose in the same period, 12% in Miami, 9.3% in Orlando, Florida, and 8.3% in Buffalo, New York. Now keep in mind, a 2 to 4% increase in value nationwide is considered average. So we have an interesting east-west dichotomy of value currently going on. The east is increasing in value while the west is decreasing. This is generally considered super unusual, if not unprecedented. As Andy Walden, Vice President of Enterprise Research at Black Knight Financial Services said, "We've never seen anything quite like this where it's so stark east to west." And this is generally speaking because there are location anomalies out there. One case I heard of in particular was from a Washington, D.C. realtor about a relocating California client who put their house on the market in the Bay Area and had 9 offers in 2 weeks. This was obviously a very expensive property, but 2 of those offers ended up going $700,000 over asking. That home closed as an all-cash deal with a 1-week close period and no contingencies. It just goes to show you how localized real estate really is. So make sure you are talking to a local agent whenever you're considering buying or selling wherever you're looking. The hyper-local perspective is critically important. And speaking of local, what's going on in our region, you might ask? In the Southwest Washington area, the average sales price has gone up $15,500 to $565,000 since last month. The median sales price went up almost as much, $12,700 to an even $513,000. Then the number of closed sales increased by 85 to 473 in March, and new listings also increased by 240 to 701. Pending sales were up 85 to 585, but active listings only increased by 4 to 685 from the previous month. Inventory has dropped a little from 1.8 months in February to 1.4 months in March, with total days on market dropping 12 days to 60 days total, or about 2 months on average for a listing to sell. Now, some of this is to be expected, as typically the market starts to heat up in the spring and early summer. So you can even see our real estate market is super localized, maybe even more so. Up in Seattle, prices overall are still coming down, while we are seeing some price increases here and increased competition around and below the median price point. I just had a first-time home buyer shopping just below the median price point who decided to go a little further north to seek out better deals. What they found, even though it constitutes a 30-minute longer commute, was $40,000 to $60,000 worth of increased value in the same price point as compared to Metro Vancouver, and a heck of a lot less competition. In fact, we were the only ones making an offer on that particular property, and as such got a bit of a discount. But with this recent fiscal fiasco putting Silicon Valley Bank out of business, making the second largest bank failure in US history, and destabilizing the smaller bank realm, we really aren't sure what the Fed's next interest rate move will be or when. According to Alexander Yoakum, equity research analyst at CFRA, credit may be a little or a lot tighter moving forward because of the smaller banks' contraction of deposits brought about by a spooked public. And with this portion of the banking sector affecting public sentiment and possibly overall banking stability, where does that leave us with the Fed's latest attempt to control inflation? Federal Reserve Chair Jerome Powell said Silicon Valley Bank failed badly, underscoring the need for better controls despite what had been escalating oversight by the Fed's own examiners. As such, at least for the immediate future, we seem to be on hold for any increased interest rate in an effort to keep the faith overall. As Powell related, these are not weaknesses that are running broadly through the banking system, he said at the close of the Fed's latest policy meeting, also adding that depositors' money is safe. Because of this, and a lot of folks seeing an opportunity, the corresponding median price points are, once again, in our area, starting to see multiple offer situations, often escalating over initial asking price. I was in one a couple of weeks ago that had 3 competing offers, and I just talked to a fellow agent yesterday who said they were in a recent multiple offer situation with 15 different buyers. Given it's still not quite as desperate as it was about a year ago, and some higher priced homes in the area are still languishing. But again, if a home is good value and marketed appropriately, it will likely sell in less than average days on market. Only a few days ago, I had a $725,000 home I was planning to host as an open house for its first opening weekend on the market, and it went pending. Yes, it went pending the same day it listed. As far as timing goes, everybody's needs are different, and not all people see things the same way. It may be a good time for some buyers to get in since we are on hold with interest rates, at least for the time being. And medium-priced home sellers are starting to see escalating offers once more, so it might gear up to be a good selling season for those folks. But predicting the future is risky at best, which reminds me of a quote I recently heard that goes, "He who lives by the crystal ball is destined to eat ground glass." If you appreciate these videos, tag that thumbs up button. And if you want to see more content just like this, be sure to subscribe and use the notification bell to guarantee you'll see anything new. Thanks for hanging out, and I will see you in the next episode of Cascade Living.